A recession seems to be looming, and I know many of you are wondering how to protect your money. It's a stressful time for sure, but what if I told you that you could actually make money during tough economic times? Yes, it's possible. In this video, I'm going to share my top investment tips and strategies to help you not just survive, but truly thrive during a recession. Whether you're brand new to investing or you're an experienced pro looking for some recession-proof strategies, this video is for you. We'll cover how to protect your finances, the best investments for tough times, and exactly how to position yourself for long-term financial success. Ready? Let's get into it. First, let's quickly understand what we're dealing with. So, what is a recession? Simply put, it's a significant decline in economic activity that lasts for more than a few months. You'll hear economists talk about a drop in the gross domestic product, or GDP, for 2 consecutive quarters. Common signs we see are rising unemployment, a shaky stock market, and businesses tightening their belts. For most people, this means less job security and a hit to their personal finances. A recession often leads to companies slowing down or even laying off employees to cut costs. As a result, consumer confidence drops, leading to less spending and more uncertainty. But here's the key takeaway I want you to remember. While recessions bring challenges, they also create incredible opportunities for smart investors. It's all about knowing where to look and having a solid plan. For instance, when stock prices drop, it opens up opportunities to buy great companies at a discount, which can lead to long-term wealth. The key is to stay calm and make informed decisions. All right, let's dive into the core strategies for investing and actually making money during a recession. The first and most important principle is diversification. You've probably heard this before, but it's absolutely crucial during uncertain times. Diversification means not putting all your eggs in one basket. Instead of just owning stocks, you want to spread your money across different types of assets. I'm talking about a healthy mix of stocks, bonds, real estate, and even commodities like gold and silver. The reason diversification is so important is that different asset classes react differently to economic shifts. For example, bonds tend to do well when the stock market is struggling, and commodities like gold often rise in value during periods of high inflation. Diversifying ensures that your investments are spread out, which helps reduce the risk of losing everything if one asset class performs poorly. Why? Because different asset classes react differently to economic changes. If the stock market is struggling, your bonds or gold might be holding steady or even going up. Diversification is your financial safety net. It's what helps you sleep at night when the markets are volatile. Next up, let's talk about a specific type of stock that can be your best friend during a downturn: defensive stocks. These are companies that sell essential goods and services that people need no matter what the economy is doing. Think about it, even in a recession, people still need to buy groceries, use electricity, and take care of their health. This is why companies in sectors like utilities, healthcare, and consumer staples tend to perform well. We're talking about household names like Procter & Gamble, who make things like toothpaste and laundry detergent, or Johnson & Johnson in the healthcare space. These companies are less affected by economic slumps. Plus, many of them pay stable dividends, which is like getting a regular paycheck from your investments, providing a reliable income stream when you need it most. These companies often operate in non-cyclical sectors, meaning their products and services are in demand regardless of the economic climate. This makes them ideal for recession-proof investing. Additionally, some of these companies are leaders in their industries, which can provide added stability and growth during uncertain times. By investing in these sectors, you're less likely to see dramatic drops in stock value, and you may even see steady, reliable growth. Now, let's discuss something shiny: precious metals, specifically gold and silver. For centuries, gold has been seen as a safe haven asset. When markets get chaotic and currencies lose value, investors flock to gold. Why? Because it has a long history of holding its value. Unlike paper money, you can't just print more gold. Its supply is limited, which helps it retain value, especially during times of high inflation or market crashes. While other investments might be tanking, gold often holds steady or even increases in price. Having a small allocation to gold or silver in your portfolio can act as a powerful insurance policy against economic turmoil. It's a classic move for a reason. Gold's role as a hedge against inflation is key in a recession. While central banks may print more money to stimulate the economy, this can lead to inflation, devaluing currencies. Gold tends to hold its value in these situations, making it an ideal asset to protect your purchasing power. Also, silver, while more volatile, can sometimes outperform gold during economic recoveries. So it's worth considering as part of your precious metals strategy. Another fantastic investment to consider is real estate investment trusts, or REITs. REITs allow you to invest in a portfolio of income-generating real estate properties without the hassle of actually being a landlord. You can buy and sell shares of REITs just like stocks. Now, you might think real estate would suffer in a recession, and some sectors do, but certain types of REITs are surprisingly resilient. For example, REITs that own healthcare facilities, data centers, or self-storage units often perform very well. People will always need hospitals, and our demand for digital data is only growing. REITs can provide a steady stream of passive income through dividends, making them an excellent addition to a recession-ready portfolio. What's great about REITs is their ability to offer both growth potential and income stability, which is especially valuable in a recession, since they are required by law to distribute most of their income to shareholders in the form of dividends. REITs can be an excellent source of cash flow during tough economic times. Additionally, some REITs focus on residential properties or logistics centers, which also tend to be more resilient as people still need places to live and goods to be delivered, even in a downturn. Okay, we've covered investment strategies. Now, let's shift gears to protecting your personal finances, because you can't invest money you don't have. The first step is to take a hard look at your budget and start cutting unnecessary expenses. During tough economic times, creating more room for savings and investment is paramount. This means you need to be disciplined. Go through your bank statements and identify where your money is going. Can you cut back on luxuries like eating out or expensive hobbies? Do you have subscription services you forgot about or no longer use? Can you find cheaper alternatives for your everyday expenses, like switching to a more affordable grocery store? You can also look at bigger financial commitments, like refinancing loans or negotiating lower interest rates on credit cards. Cutting back on discretionary spending is important, but reducing your fixed expenses can have an even bigger impact on your bottom line. The goal here is to live below your means. Every dollar you save is a dollar you can put toward building your emergency fund or investing for your future. It's about focusing on what's essential. Speaking of which, the next crucial step is building a robust emergency fund. This is non-negotiable. An emergency fund is your financial safety net for life's unexpected curveballs. The standard rule of thumb is to have at least 3 to 6 months' worth of essential living expenses saved in a high-yield savings account. Think about it: if you were to lose your job, this fund would cover your rent, bills, and groceries while you find new work. More importantly, it acts as a buffer that prevents you from having to sell your investments at the worst possible time. When the market is down, the last thing you want to do is cash out your stocks at a loss. Your emergency fund gives you the peace of mind to ride out the storm. Finally, let's talk about the most powerful tool you have: your mindset. Staying calm and avoiding panic during a recession is so important. Market downturns are scary, and it's natural to feel anxious when you see your portfolio value drop. But emotional decisions are almost always bad financial decisions. I want you to remember this: recessions are temporary. The market has always recovered from every single downturn in history. Smart, long-term investors know this. They see recessions not as a crisis, but as an opportunity. When others are panic selling, they're buying quality assets at a discount. If you have cash on hand, a recession can be one of the best times to build wealth. The key is to stay disciplined and stick to your investment strategy, no matter how chaotic the markets get. This is when the best investors make their moves. When everyone else is selling, they're buying. A downturn can be your chance to get ahead by purchasing quality assets at bargain prices. So, stay the course, stick to your plan, and think long-term. All right, let's do a quick recap. We talked about recession-proof investment strategies like diversification, defensive stocks, gold, and REITs. We also covered the importance of protecting your personal finances by cutting unnecessary expenses and building a solid emergency fund. And most importantly, we talked about maintaining a calm, long-term mindset. Recessions can be intimidating, but with the right knowledge and strategy, you can come out stronger on the other side. Thank you so much for watching. If you found this video helpful, please hit that subscribe button for more tips on investing and personal finance. I'd love to hear from you in the comments. What are your strategies for recession-proofing your finances? Share them below. And don't forget to share this video with anyone else who might need it. See you in the next one.